Well, let's take you to some more news stories from the world of business now. And the National Treasury is negotiating with the International Monetary Fund to secure a new standby loan facility to cushion Kenya's budgetary needs in case of any external pressures. KTN's Brenda Kirubo now reports on why this facility will be crucial and the strings attached when it comes to raising taxes from ordinary Kenyans.
The last $1.5 billion standby credit facility Kenya had with the IMF came to an end on September 2018. Though Treasury is securing another bond to boost infrastructure spending and shore up its reserves, it still needs a new IMF facility to protect itself from external shocks.
There were very favorable market circumstances in previous years. Now, there's a little bit more shocks internationally, but the markets, very much remain open. I think what is most important when considering this source of financing of any other source of financing is finding the right balance between the benefits and the risk, and in particular having a very active strategy of managing debt.
The National Treasury, on its part, has promised to increase tax collections in a bid to make debt repayment easier.
Very big potential, whether it's on the tax policy, on the tax administration side, that comes from making the best use of improvements in technology. For instance, in a number of countries, it used to be quite difficult to tax property. Because it was hard to register property, it was hard to have a physical cadastre as it is not. But nowadays that you have this you can look at properties from the sky by satellite photography.
In the case of Kenya, we have done a lot already to deal with the tax expenditures and exemptions. The key for us is to look more into broadening the tax base there, because there are quite a number of people who are not yet in the tax net.
Prudent fiscal management of infrastructure funds and transparency are also key factors highlighted by the international lender.
The poor management of our public investments can lead to a lot of losses in terms of higher expenditures for infrastructure.
Spending better is as important as collecting more. In fact, it can even yield better results in terms of sustainable development.
Kenya's total public debt is currently at 5.3 trillion shillings as at December 2018. That is about 53% of the debt to GDP ratio. Treasury insists the debt remains sustainable against a threshold of 70%. Brenda Kirubo,